All right, in this video, we're going to talk about moving averages. I want you to go to Trading View. I have a video coming after this, or that I'll flip to, but go to Trading View now, and I'm going to show you how to add moving averages to your chart. So you can see we got the Euro USD chart up. I want you to go up to your top toolbar. Right here it says indicators, click that. And I want you to type in multiple multiple EMA/SMA, and you'll see multiple EMA SMA by 10,404. That's the one that we want. So what we're going to do is go over to the star and add that to your favorites, and then exit out of that. Any indicators that we add, that's the process of how we're going to add it. Now, when we click on indicators, the box will populate with our favorites. And so you'll add more indicators later. But for right now, click on that and close the box. What you'll see up here to the left is that indicator. So what I want you to do is hover over it, go over to the gear, and that's the settings tab. Click that, and the EMA customization box will open up. Now what I want you to do is go down to SMA 1, SMA 2, and SMA 3. We're going to change the values there. SMA 1, and what this does is it allows you, I'll explain in the video, but it allows you to select the length of that SMA. SMA stands for simple moving average. And so we're going to type 50 into SMA 1, 200 into SMA 2, and then 800 into SMA 3. Now go to Style and uncheck all of the boxes except for SMA 1, 2, and 3. So I'm going to uncheck all of these. I'm going to leave SMA 1, SMA 2, and SMA 3 checked and uncheck the rest. And then I want you to uncheck labels on price, scale, and values in status line. All right, so now you should only have SMA 1, 2, and 3 checked. Click on SMA 1, and you can customize these colors as you want. I'll show you the colors that I like to use. I like to use red, so I'm going to leave that red, but I'm going to change the opacity to 100%, and I like a thin line, so I'm going to put the thin line there. And I'm going to use the same I'm going to use blue for the 200 SMA 2. I'm going to change the opacity to 100%, and then a thin line, and then the same for SMA 3. I'm going to make that orange. 100% on the opacity and thickness there as a thin line. And that's all you have to do. Hit OK and then click your chart. What you'll see is these lines on the chart, and I'm going to explain what those lines is in the following video. So hold tight, let me cue up that video. Yesterday we were talking about support and resistance, and so in downtrends we're going to create lower highs and lower lows. And usually what we call is old support turned resistance is what we like to trade. And so when price comes down, it hits a level of support, it retraces, but then eventually that support gets broken, and then it comes back for a retest. And that old support becomes resistance. That is what we like to trade, because we can enter in right there, set our stop loss just above that, and ride this down. Okay, so that was a concept that we introduced last week. It's the same for uptrends. That old resistance will turn support. So we'll break through that resistance, come down and retest resistance. And if it holds up as support, we enter in and catch it to the upside. So that was the concept and the basis of our training, understanding where support and resistance is and trading break and resistance. Today, we're going to talk a little bit further on that. We were going to cover moving averages yesterday, so I just want to hit that today because with moving averages, they act as dynamic trend lines. Dynamic in the form that it's not a straight line, but moving averages move all over the place, and I'll show you that tonight. And so with moving averages, they're the average price of past candles over a specified period of time. All right, so I'm saying a lot. So we use 3 moving averages in our strategy. We use the 50, and MA stands for moving average. So we use the 50 MA, 200 MA, and 800 MA. The 50 MA is an average price of the last 50 candles on any time frame. So if I'm on a 5-minute chart, it would be the last 50 5-minute candles. If I'm on a 1-month chart, it would be the last 50 1-month candles. 200, the same thing. 200 MA is the last 200 candles, the average price of the last 200 candles. 800 MA is the last 800 candles, looking left. And so we look at these MAs as dynamic support and resistance. And when you we'll go to the chart and I'll show you these. But what they're reporting is what the market believes is the fair market price. So you'll see price usually go around a 50 MA or a 200 MA or be drawn to an 800 MA on the chart. And so when you flip through the time frames, you may be on the 5-minute chart, or you may be on a 4-hour chart, or you may be on a 2-day chart. When you're on that chart and you see that MA is reporting the last 50 candles. The 50 MA is reporting the last 50 candles on whatever time frame you're on. So the last 55-minute candles, or the last 54-hour candles, or the last 50 2-day candles. Same with the 200 MA and the 800 MA. All right. So like I said, we can use these as dynamic support and resistance. And this is the concept that I want you to get, is that the reason why we use moving averages is because when you back test this looking left, they act as magnets for price. We see price being drawn in that direction. So if all the MAs are above the price, we see price rising to meet those MAs. If it's below the price, we see price dropping to meet those MAs. All right, so let me show you an example of this on a chart. What you see here is this brown line is the 800 MA. This blue line is the 200 MA. And this red line is the 50 MA. Right? And so now, if you can see on this downtrend, the 50 MA is acting as resistance to price. So price drops, and then it pulls right back up to the 50, and then it acts as resistance, drops again, and it rides that 50 MA all the way down. And so we typically see that until it's able to break through. And then once it breaks through, just like trend lines, resistance turns into support. So when it breaks through, it comes and retests it, and then use it as support to go the other way. So that's why we call it dynamic support and resistance. It's not a straight line, but it moves with the average of the price and act as resistance. All right, let's look at another example. This is price action, where you see the 50 MA here, and you see price dropping, and then it pulls back to the 50, and the 50 acts as resistance. Then it drops, and then it's resistance, drops, and then it breaks through and uses it as support now. So now it's support, or resistance turns support, and now it's climbing on top of the 50. Breaks through, now it's resistance. And then it breaks through again, now it's support. Now it's riding it up and using it as support to climb up. So that's the importance of MAs, because usually price will go to an MA and reject off the MA. You'll see the gaps between the MAs. So this is 50. The lower the MA, the closer it is to price. So it's pulling from the data from the last 50 candles, and so it's closer to price. This blue line is 200 MA, so it's pulling the last 200. So it's going to be further away from price. And then this is the 800 MA. It's pulling the last 800 candles, and it's usually away from price as well. But what happens is, as it's riding the lower MAs, once it starts climbing, you'll see that gap filled. So you'll see it move from the 50 MA to the 200 MA. And then once it gets there, it'll go from the 50 MA or the 200 MA, and it'll pull up to the 800 MA. And then once it rejects off the 800, then it'll go back down to another MA, goes to the 200. So it's a way for us to predict price. Now, it's very powerful when you combine a trend line with an MA. So this is an example of what this will look like. We see that we have a trend line here, and this is an actual trade that was called, I believe this is USD CAD, that was called on Monday or Tuesday or yesterday, one of the two, but it's on a trend line. So it came on the trend line, hit it once, went up, came back down, hit it twice, and then went up. And you can see that this trend line is riding the 200 MA. It's following that trend line. And so price went up, and now it's coming back down to the trend line, but also the MA. And so that becomes what we call confluence, two elements meeting at once and acting as support. And so we can take this trade, we find structure, there's structure here, and there's structure here. So we can take a trade here, and what you can see is we moved the stop loss just below this area of confluence, the trend line and the MA. And that if it drops down, we would be taken out of the trade. But if it goes in our direction, take profit one would be at this area. Take profit two would be from MA to MA. So the 200 MA to the 50 MA. That we're looking for price to go from here all the way up to there. So the MAs work well with the trend line to help us predict where price is going.